Doing tonight? I'm excited. I'm so excited for tomorrow, guys. We have a huge day tomorrow, and I'm going to help you guys not get confused because we got a tricky day. I got a couple charts. I'm going to cover CPI. I'm going to give you my levels. I'm going to tell you where I want to be. I'm going to tell you where we're already positioned. Sorry, we got sound. What's up, ID? How you doing, man? Or girl, boy, girl, I don't know. So, but anyway, thanks for joining us. Let me make sure I've dotted my I's and crossed my T's. I kind of just hit the buttons and started the stream right up. So, let's get into it. CPI, big day tomorrow. All right, the street is expecting a higher than expected number. All right, but what number? You have core, you have headline CPI. Core, we know, is obviously going to be high. If you haven't seen a chart of, everyone's seen a chart of oil. If you guys could, first off, please, if you could, help this stream out. Just give me a like, subscribe if you haven't already done so. We'll take questions. If you guys have any questions, throw them in the chat. Any charts you guys want to cover, throw them in the chat and stuff like that. Bingo, it's good to see you, my guy. I hope you're doing well. So, we're here. Guys, we're what? It's 9 o'clock. We're 12 hours away. 11 and a half hours away from shit getting real, right? Shit's about to get real. All right. I'm going to be watching tech. Well, I'm going to tell you what I'm going to watch depending on what this number comes out. So I'm going to get into the number. I'm going to get into what sectors, where do I want to be? We've already got some like longer dated, I got 6 months out TLT calls. I called TLT out 2 weeks ago. That could have been a trade. Done and over with. I said when it pulls back, I want to get it. I don't think it's time for TLT, guys. Right? I don't want you guys to just go out and go get TLT just because I did, guys. I got a lot of time on these calls, and I just grabbed them because it's a dip. I said if it does dip below where I got in, I'll be out. I'll get back in at a lower price. I'll see how it does if it cuts through my level. I'll see what, how it cuts through it. If it's got volume, if it just cuts through it, all right, then I'll be out. But if it just pulls back and it's low volume, I'll just hang on to it as long as I can until, I feel the need to get rid of it. I have a lot of time on it. So we're going to get into it. CPI. So let's talk about CPI because we could get a little bit of mixed action. I'm going to be watching yields. I'm going to be watching yields because what's going to happen? CPI, we have core and headline. All right. Let's go into them real quick. And I'm going to give you guys a chart on top of this. So here's our core month over month. They're expecting 0.2. Core is everything except food and energy. So this should come in line. But look at your headline number, guys. 0.2% last month, right? Everything has been coming down. Core and headline has been coming down. Headline is everything. Services. And a lot of people don't know this, but headline also includes services. How much does your mechanic charge you? How much, services, clothes, food, energy, all that stuff. You could actually go in and go online for yourself and see exactly what is in the headline number. 0.6 is the street consensus, forecasting 0.5. Let's look at this chart real quick. This is from the street. Let me get my charts. So there's a couple of things I want to talk to you guys about when I give you this. So here is from Bank of America, Barclays, Citigroup. You guys can screenshot this if you guys would like to. All right. This is their expectations of headline versus core. Look at the separation. Right? Look at the separation. You also, year over year, I'd have to go see what year over year is, right? Because core year over year 4.7, 4.4, 4.3. So previously 4.7. So what could be odd about all of this? This could get really tricky because inflation could come up and the market could go higher. Why would it go higher? Well, it all depends where and what goes up and what comes down. What happens? Because that's going to dictate what the Fed does. The Fed looks at core. The Fed cannot control energy and food prices, right? So, because that yield, because they can control the short end of the bond, right? They can control the yield curve, right? They can raise rates and try to slow demand, but they can't physically slow down demand themselves. They can't go be like, yo, Alaska, you're done. Delaware, Maryland, California, you guys are shut down for 3 months. So they don't have a bearing on food and energy prices. That's demand, right? They can't control demand in and of itself. The way that they can control demand over time is by raising rates and trying to slow loan growth and trying to slow things down by raising rates. Look at the headline CPI. It's still coming down, even though it's expecting a 0.6%, a nearly 0.5% change, right, in the headline CPI. If we get, right, if we get this, this is what the Fed cares about. I think if we get everything comes in line, right? So you have Bank of America 0.61. They're all right around that 0.6 area, right? 0.6%, 0.5%, right? Where's JP Morgan? JP Morgan is expecting 0.6. I probably agree with them. So, no, that's not where I want to go. So, I just want to take this down, and then I want to go to this chart. So, if our core CPI, which is minus food and energy, comes way up. Oh, let me back up, because have you guys seen cattle? Have you guys seen cattle yet? Because if you have not seen cattle, I don't know if anybody knows what that is. I expect it to go. No, that's not. LE. Nobody's talked about that, guys. Look at that. Has you heard anybody talk about food prices and meat prices for steaks? Have you heard it? Look at this. Look at that. That's actually an ascending wedge. This is on a daily chart now. Look at that. To the moon. Nobody's talking about it. Have you heard one person bring up meat? Food. Have you heard one person talk about it? You haven't. I expect it to come in pretty high, right? Again, the Fed cannot control this. Copper, what else could we do there? Right? Wheat still down. So you have cattle and energy, but as energy goes up, you can expect cattle. So if you don't know, we do trade live Monday through Friday, 7:30 to 4, right here on YouTube live for free. Nice. Yes, definitely. I'll be watching me go, let's go, bro. What's up, Collins? Nice job, bro. There was a lot of opportunity today in the SPY. So let me get through this real quick, and then we'll get into where exactly I'm going to position myself. What am I going to look for, right? Because I want to talk about what I'm going to look for in the data. And that's going to dictate what it is that I'm going to do or not do, right? Because, again, tomorrow, other than CPI, you still have a lot of data coming out Thursday. ECB interest rates, Thursday. Retail sales, Thursday. Retail sales is the other part of a recessionary, calculation, other than 2 negative quarters of GDP. Retail sales, non-farm payrolls, industrial production, retail sales from China. So, and we have what could, if we get a surprise number that could offset all of this, is the initial jobless claims that also comes out on Thursday. So there's a lot to look for. There's a lot that we're going to come into tomorrow and Thursday. Specifically tomorrow, if we get this core number comes in high, along with the headline numbers already should come in high, because that is taking in food and energy with everything else, right? So that's going to come in high. So you have 0.6, 0.5 consensus and forecast. But if core inflation rate minus minus food and energy, if that comes in high, your services and everything, now I don't know if it's going to. If it comes in at like 0.3, right? If it comes in at 0.3 and your headline number comes in about even with the expectations, I think we still bounce and wait for tomorrow's retail sales and jobless claims and PPI and the China data, I still think we could get to the downside though. I still feel like with energy coming up, because there's still talks about them not filling in the reserves. I guess we're at our lowest since like 1980, right? So with the street's expectations of 6.2, we got a 6.3 from Goldman Sachs. Now that's on a high end. If you get a 6.3, right, 6.4, 6.3, and you also get the core inflation rate month over month to also tick up to 0.3, even 0.4, you will see this market go lower. That is what I'm looking for. All right, so let me dumb it down. Core inflation rate comes in at 0.3. You know, we'll have a little bit of downside with inflation rate month over month, you know, coming in at like 0.6, 0.5. If it comes in line and you get core inflation rate to come in just a tick higher, then you probably chop around, but you chop to the downside, right? Not a lot. But if we get 0.6 and if we see a 0.7 with a 0.4, 0.5, which I don't think we'll see a 0.4 or a 0.5. I think core inflation rate they may try to tweak the numbers and it comes in right in line. But if we get a 0.4, even a 0.3 and inflation comes in higher, do you guys understand what I'm saying? I want to make sure that I'm coming across to this right. Like that you guys are understanding me. If you guys could let me know in the chat that you guys are like kind of understanding what I'm saying, I'll try to do it with my mouse. If this headline number, which is, it doesn't say headline, it just says inflation rate. This is everything. This is food, energy. Core is everything, services and everything minus, you know, meat, like your food and your energy prices, your commodities that the Fed can't control. Because this is going to dictate what they may or may not do next meeting. I think if you do get a very big surprise, you're going to see that number jump up for the CME prediction, right? The reason this is at 0.6, 0.5, again, is because it's taking in account food and energy, which is expected to go high. I just showed you, right? I just showed you guys cattle, right? I just showed you guys cattle. These are futures, live cattle futures. Look at that. Ripped, right? Ripped. And they've just been going higher, guys. They've been putting in lower highs or higher lows and lower highs and higher highs, right? Say that 3 times fast, right? So it's more than just energy right now. I'm telling you right now, it's more than just energy. They're still rising. And if energy continues to rise, this is going to continue to rise, right? Which is not going to be good, which is going to cause everything else to go up, right? This is going to be that lag effect. So we called out, and listen, Collins, Bingo, anybody else that trades with, they will tell you 2 weeks ago, 3 weeks ago, if not a month ago, we were already talking about being long energy. We were already talking about it. There was a really nice double bottom back here off of a pennant on the daily that we went, and I did not get long. I don't know if members did or not, but we said it, and I came on here and said it over and over and over and over and over and over and over again. Guys, energy, 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 energy. We are looking at CVX. So I'm going to give you guys my levels real quick, right? I mean, this was a beautiful chart pattern that we spotted back here. Look at this double bottom. We were back here talking about how we could go long it. And once we got, look at us just holding this 100-day. It chopped around, but we weren't going lower, and we're just holding this previous resistance. Bang. Once you broke above the 100-day, that last final time wicked it, boom, you just gapped and went. I think we start to see a pullback in energy. I've been saying it since Friday, Thursday of last week. I've said I think we're a bit overdone. I've been bringing up rig, Transocean, right? We've brought up XLE, all of them, right? Look at that. You're holding up here. This was your second chance to get long. Boom. Look at today. Look at that. I think this thing could make it. I think it, with this volume, actually, guys, with that type of volume, I want to say it could be a failed breakout, but not with that volume. Look at this volume down here. This volume to the buy side continues. This is more your pipelines than anything else, which is finally going to start making money again. You know, that's so. How am I going to position myself? So again, if both, now not necessarily if both, But if your headline number comes in higher than expected, right, which is just regular inflation or core, core. If core comes in at 4, 3, you know what I mean? If we get a 0.3 in the core and then inflation rate month over month comes in about in line, maybe a 0.7 or 0.6, which is one of the consensuses, right? That's a big jump, guys. We've been coming down. Look at the chart. We've been coming down for the most part. I'm going to look for the market to chop sideways. If these numbers come in line across the board, right? I'm going to look for the market to just chop, maybe pull to the downside. But if that core number is higher, and I'm talking like 0.4, and if you see 0.5, we're going to 3. The S&Ps are going to go to 440. Qs are going to back down. So let's talk about, and listen, I'm going to be on here live early. I will talk you guys through the number live right here. If you guys are working, whatever, come right, Ivy League Trading, YouTube.com. I will be on bright and early, getting all my levels. There's still a lot of news to go through too, guys. There's still a lot to go through, right? We talked about a trade we were looking at today. Got into one yesterday, but I'll talk you guys through it as that number comes out. I'll talk you guys through it and what I'm going to plan on doing. If you don't know, you can play SPX options pre-market. If you don't know that. If you don't already know that. And again, if you guys have questions, you guys can throw them in the chat and I'll cover them. I'm going to give you guys my levels real quick. I really like how the S&Ps pull back. That's a nice rejection off the 50-day. I think we might start heading to the downside tomorrow. That's a sign right there, guys. That's a beautiful chart setup to get short. I'm going to be short tech, right? I want to be short tech because what do rates affect? They affect technology, right? As if rates rise, which I'm going to be paying attention to rates, right? You could also pay attention to TLT. If you don't want something that's that volatile, you could look at TLT. If the numbers come in higher and you see the 10-year, 30-year, 20-year twos start to go higher, you can look to short TLT because as yields go up, the price of that will come down. Sorry, I got to move this over. 441. Yes. I'm going to bring up the Qs because the Qs are beautiful right now, guys, for look at them. We stopped right at the 50-day. This is not on purpose. Like, this is a make or break number tomorrow. Look what the Qs just did. Literally on it. Pretty much. You can't get any closer than that of closing the day right on that 50-day moving average. Right? Let's look at the daily chart. Look how high. It's not that high, but that RSI is pretty high. We have said that we have looked for a bounce. All last week and the week prior, we said we're looking for a bounce. Right? We wanted to look for a bounce. Why did we want to look for a bounce? Because that would give us that lower high on the weekly chart if we're going to get downside further on down the road here, whether it's this month in October, whether it's November, December, first quarter of next year, second quarter of next year, January, February, whatever. That would show us that we have a higher low on the weekly chart. Long-term trend would be to the downside. We still have gaps below us. We still have not necessarily made that 420 area support. We have not dug our teeth in and had like a consolidation at 420 on the SPY. I'm still looking for a pullback to there, right? We're not just going to go gap and go. We're going to come back and visit it. But what's the reason? This could be one of the reasons, but it's got to be for us. I'm not sitting here saying we're going to go to 420 just because of this. It could be CPI with another initial jobless claims number that comes in lower than expected. The Fed doesn't want that. That means they're going to really have to continue with these rates. The labor market's still way too strong. CPI or inflation is still way too strong. They got to do more. There's been a lot of liquidity. There's been so much liquidity. There's just a lot of money flowing around from the COVID relief money. It's going to take a lot of time for that stuff to filter out and for people to really go broke. We're seeing small signs of it. We're seeing small signs of contraction. Don't question. But the leverage SPX bull bear is the leverage already priced into the options. I'm using increment. I just play the SPX as if it were a future. If the S&P, it's going to be the same thing as just playing the SPY and whatever. The only thing is the SPX. All it is one contract is 10 contracts of the SPY, is what that is, and it might even help you with taxes. You know, like you or not necessarily taxes, but the SPX is to save you from paying a ton of commissions. Because if you're a person that buys 50 to 100 contracts of the SPY, 200 contracts, you could just go ahead and buy, 5 or 2 or, you know what I mean? You could buy, if you buy 10 contracts, really you're just buying one of SPX is how SPX works. It's technology weighted. I mean, well, the SPY is technology weighted. That's a stupid remark by me, but the SPX is it's tied with the Dow and technology. That's not the point. The point of the SPX though is to save people that trade large size to not have to pay up in those commissions and maybe even taxes. Because for one contract of the SPX is equivalent to 10 contracts in the SPY. It's pretty much how that works. So if you buy 20 contracts, right, you'd buy 2 SPXs. If you buy 50, you're buying 5. If you buy 100, you're buying 10 SPX. And what that's going to do, it's going to bring down your commission cost. Right? That's what that's for. It's a way to help save some people some money on commissions that trade large size. Right? Because, depending on what type of broker you use, right, whether you pay more, whether you actually pay for your options, or if you just pay like 50 cents to a dollar. Some people pay, $2.50, $3 a contract, $1 a contract, but get a decent price, right? So you could go to the SPX and, instead of having 10 contracts worth of commissions, you have one commission for 10 contracts of the SPY. Hopefully that answers your question. But that's how I look at the SPX. I just trade the SPX as if I was trading the SPY. I just trade it as if I'm buying 10, 50, 10, 20, 30, 40, 50 contracts and just go to the SPX instead of the SPY. It saves you on commissions. You know what I mean? See, SPXL, SPXS, yes, that's double and triple leveraged. Yes. Inverse and yes. So yeah, that what you're saying there is double, triple leveraged. All right, so let's do it. Let's go to the SPY first. I'm going to be short tech. One stock before I get into all of it. You guys got to watch Apple. Apple's been pretty weak, right? So you want to know if the number comes out and it's a decent number where it comes in under both, or if the headline number, which is core, which is my core minus food and energy, comes in line, and you get headline CPI to come in below the expectations, this market's going to bounce, which it could because it's from the month prior. Like you can look at oil right now, but we're not talking about right now. We're talking about last month. So don't get over your skis when you hear people talking about oil's at $90 a barrel, this and that. This is for last month. This is not for this month. And we've kind of just, this is not what I want it to be on. Right? I can just go to like USO, but so last month, here you go. Here's August. So August was up just a little bit. Maybe it's not that much. Cattle and food was up. It was up a lot, and it's been going up. Like cattle futures have just been ripping. XPXL. Well, you could do that if you're buying the stock outright or contracts. Options, you could do that and not spend as much money. You could do it for a hedge, right? A lot of people do it because let's say if you're getting 3 times leveraged, right? That means you don't have to put out as much money. If you're trading, if you usually are spending $2,000 to catch 1.5%, right? Just making up a number, or if you're trading options, well then you could just take $200-300 and still get 3%. So what you're doing is you're bringing down the amount of money that on your cost basis for your trade and still getting that the same amount. So if I traded the SPY and I bought 20 contracts, I spent, let's just say 10,000, not 10,000. If I bought 10 contracts and I spent $2,000, I could go to SPX, or not SPX, but you know, the triple leveraged. I could go and spend, maybe I buy 2 contracts, or if I'm, you know, if I buy the equity itself, right? Which a lot of traders do. They just buy the equity itself instead of buying the SPY and having $50,000 to $100,000 out. You could buy the SPX, what is it? The triple leverage, and have 2 to 15,000 out instead of 50 to 100,000, because you're getting that triple percentage. So that means your cost basis for your position could also be down. You could also use it as a hedge, right? So you could take your long the S&P and you're short the triple leverage, so you don't have to necessarily go to something else like the dollar. You don't have to like have 20 grand out here and 20 grand out here. You could have 20 grand out on the SPY and then like 2,000 to 5,000 out on the triple leverage for the opposite side as a hedge, right? A lot of people don't look at triple leverage like that, right? Because it's your cost basis on your position. If you're getting triple the leverage, you're getting triple the move, that means you should be able to bring down triple your cost average. So you're not spending as much money. You're managing risk by doing that. You're not having as much capital out because you're getting a juicy move. So you want to keep your capital and your cost basis down. So if nobody's ever told you guys that, you know, you could use the SPXL and stuff like that and actually bring down your position size and still get that regular move that you're looking for, whether it's 5%, 10%, 20, 50%, whatever you guys do. You know, I don't know what you guys do. So there's that. So let me get into this core real quick. I'm going to give you guys your numbers, and you guys are good. Yeah, throw them questions in there. I'm actually kind of curious if it doesn't come in this high. I'm saying, guys, the street, everyone and their mother is expecting it to come in right around consensus. Here is the other side to this, guys. If we start, why did we have what we had back here? Why did we have all this in the SPY? Why did we have this whole market? Do you guys know why we had that? We had that not just because of Russia war. Right? February. This is the Russia invasion right here. Jesus Lordy. This is important, guys. I'm telling you. You're not going to get this education anywhere else without having to pay thousands of dollars for it. This is your Russia. Come on. And listen, uranium's been going up too. I haven't talked about that on the streams or anything, but uranium's been ripping. CCJ, UUUUU. They've all been ripping. That's commodity. Right here's your Russia invasion in February. Into March. What did the market do? It bounced. We're not worried about Russia. We're done with Russia. Why did we get this? Why did we get all this? What do we have here? We have 2 things right there. We have 2 things going on. In October is when we started to get inflation numbers coming down. But that's not this. That's not to the left of us. What is to the left of us is the economist getting the numbers and the estimates and consensus and forecasts wrong. If we start going down the path where the economists cannot get this number correctly, which I would expect maybe we have them not get it so correct this month, maybe next month we get back on track. But this whole time, this whole volatility was because they could not get the numbers correctly. It would come down one month and then bang, we went from 0.6 to 0.8. And they were expecting like 0.65, 0.7. Boop, we got 8.2. Right? So then they go to 8.2. That's what we got last month. We'll say, yeah, it's at 7.9, 6.1. And it's way lower. And then we get that 9 in August, September. They could not get the numbers right here. That is the volatility. If we start seeing the economists not get the numbers right, that's also going to bring volatility. Because the market's not going to know what to price in. The future is unknown. So keep that in mind. If we get this month's number and the numbers are not where the forecast and consensus is, okay, we'll take it for what it is. What's high, if it's low, okay, then we're going to look for next month. Are they able, is there too much volatility in the markets as far as commodities, oil, and pricing? Is it too much and the economists are getting the numbers wrong? the market won't know what to price in because they're not seeing what's going on. They don't have a grasp on what's going on. That's going to cause volatility as well. Um, no, I've actually been thinking about taking my 56, my Series 56 and stuff. I've actually been thinking about it. I've actually still been thinking about it, but I trade my own capital. I really haven't had a reason to. I know the numbers that I need to get to keep me, where I want to be, But yes, I am thinking about it. I have a couple things that I'm trying to do, but yeah, I would suggest anybody definitely go, study for the exam and go get them. Why not? It could open up some doors for you. But I do plan on it. So tomorrow, here are my levels, guys. This is the S&P. Um, Top side is going to be obviously up here at 450, right? 449, 450. That's going to be the top side if both, like, not necessarily if both numbers come in, but if the let me see here. If the core number still is able to come in low, which would mean the headline number came in low too, because this is from last month. Maybe it's September that we really get hit. But there has been a rise. Is it a rise, a half of a percent, 0.5% high? Maybe zero point 0.4, I'm going to say maybe zero point 0.4 it comes in. That's my guess. All right, and then that would mean core inflation rate, the core number should come in right around as expected, maybe zero point 0.3, right? That would mean the market would trade sideways. We wait for retail sales, we wait for initial jobless claims, and then we wait for we have the Fed meeting next week with rates. Man, were you guys hearing me the whole time? I didn't know I had that up. I didn't know I had my stream up on another page. Oh my God, I hope not. Man, I hope not. Was there something else playing in the background, guys? So, if we get a better... And again, guys, I'm going to talk you guys through the numbers as it comes out in the morning. Just join us right here live. If you guys haven't done so, hit that like button. Subscribe if you haven't already done so. It really helps us out. 450 is where I'm going to look to get to on the upside. Now, if we get a crazy low number, which I don't think we are, then you're going to look to get up into this gap. Right? It's going to take a little bit. I don't think we get into the gap even with a good number because we still have retail numbers. We still have initial jobless claims. We still have PPI. Right? There's still a little bit more data, consumer sentiment. Right? That's all still on the horizon Thursday and Friday. Let's talk about the downside. I want to look for your... Man, this is going to be tough. 441, like Bingo said. Right? If we get a bad number, and PPI goes with it, so you got to think. This could be a 2 to 3 day downside. Like, we could take the rest of the week down if not just CPI, but retail sales. All the stuff I just listed that comes out Thursday, comes out Friday, the data that we have coming out, the ECB, China. Like, there's still a lot of data across the world also. We could find ourselves back down here at 437. Right? That's a pretty big move. Right? But not really. It's only 2%. That's a 2% move. That's doable one day with CPI tomorrow. Right? So what I'll look for is this 100-day moving average. If the numbers come in, which I'm going to talk to you guys live on stream right here, Ivy League Trading, youtube.com. I'll be on early in the morning. If the numbers come in bad, and then we also get PPI and retail sales to come in at a bad number, I'm going to be looking to test this 100-day moving average. What else am I going to look for? I'm going to be taking profits at 441, at like 441.50, right? Coming into the 441 area, if this number comes in like it's expected to, and the market doesn't like it, I'm going to be looking to take profits in front of that number to get some nice fills, right? I'm just going to have orders out there. Okay, awesome, man. Thank you. Where do we want to be? We want to be in tech. So tech has I think the Qs have the furthest move to the downside. Qs are still up at the 50-day, right? We have a bigger move that could take us. And it's not to the upside, but the real move would be to the downside. That's where we would, if we want to catch a move, we want it to be to the downside, because that's going to, if we open up here, which we obviously won't because of CPI. I mean, this is still the same thing, around 2% back down to this area. I still feel like we need to make this support. That maybe CPI is our reason to head back down this to 365 on the Qs. That's the number that's the area I'm going to watch for, is 365 on the Qs to get down to. Right here. Let me do this one more time. I'm going to look to get back down here. Come on. Doesn't have to be perfect. Oh my gosh. Fucking bastard. I apologize. I'm going to say 365.50. 365.50. And we'll look for this thing to get back down. Nah, see, I don't like that's too much. Right there. That's where I'm going to look to get to. That's where I'd like to get to, in that area. 365. 365.50 to 365 flat. Let me get this going. Boom, boom. There we go. That's where I want to see the Qs get to. That's going to bring that 50-day up, and we consolidate, see what PPI does, and all that fun stuff. So if you don't want something that's that volatile, what you could do is watch TLT. I went long TLT yesterday. Yesterday, I went and got January contracts for TLT. Pretty much ended December, 1st of January. I want to get the pullback. I shouted to the top of my lungs that this was where you wanted to be long TLT for that nice trade. It played itself out. It played itself out. You can actually go back to the dates of this and look at the thumbnails that I put out for this. I said the time is now with the champ. Sugar Sean won that weekend. And TLT, I had him like this with TLT right up above him in the thumbnail. So, Qs, TLT, right? If yields are going to go higher because we have a bad number, you're going to look for TLT to get lower and actually break this level, right? You're going to want to look to break this level and get back down to this low of like 92, right? You're going to look for that 92. And what would that also do? The thing is it's already a bit oversold. There was a reason why I said for everyone to get long, because you have lower highs while the stock, while TLT is putting in lower lows, but your RSI and MACD are curling up. That's relative strength. That's relative strength. That's a trend reversal, right? Being able to spot trend reversals. So I would look for TLT to come in. Maybe we put in that double bottom and then we can finally, maybe it breaks, right? But I don't think it breaks. I think at worst case, we get down to 92. You get buyers in there to hold it up. Because I'm going to tell you right now, if TLT gets back down to 92, you got a lot of people waiting to buy on the way there. You might not even get to it, right? It's going to have to be real bad for TLT to break that level. So let's look at Apple. Apple is a stock that's been pretty weak. Now, this is a mega cap tech stock. This is not necessarily what I mean, right? When I say I want to be short tech, this is not really what I mean. But it has been pretty damn weak. So let's go to the weekly. But I want to show you guys the stocks too, though, that I would like to be short. Like real tech stocks, like Snow, Roku, right? Look at ARK, right? ARKK. Roblox, Roku. I have a whole list of them that I could give you guys in the morning. We were talking about being short Roku today. And matter of fact, Sunday night, I said it. Please, if you could, hit that like button, subscribe if you haven't already done so. Sunday night, and Bingo went and took advantage of it. He saw the same thing. We said a bounce back on Roku, short it. Gave you the levels. I'm not even going to look at Apple. I'm going to go to Roku right now. I want to see Microsoft too, though. Which I'm going to get into all these. If you guys have tickers or any stocks you guys want to go through, I'm going to hop into the news after I cover this real quick. Um, Microsoft's looking like it's trying to pull itself back. I wouldn't be surprised if it gets down to 327, right? 327.50 looks for a good spot for Microsoft to pull back into its support area, which would be, look what you have, guys. You have the 20-day and the 100-day moving average all right here coming up into this support level. If this sells off, that 100-day is going to get pulled up because it's going to price that stuff in, but it's a longer term average. So the 100 days is not just going to curl itself straight up in the air, right? Um, Roku. I said Sunday night. Guys. Any bounces on Roku, I'm going to short them, right? Go look at a 5-minute chart from Sunday. What did you get Monday? Look at that bounce. This is the level to a T, guys, that I said I'm going to short Roku. $88 short Roku. Look what you got. Bang. Bang. And then today, look at this. Short the bounces. You don't want to just short it, just to short it. You want to wait for it to make that bounce, put in that lower high, and as it's making the bounce, you may not know exactly where it is, but you can say, hey, I got 1, 2, I got, what do we have here? Let's dissect this, right? Let's dissect this. Right there, right? You bounced, held it as support. What's there? Resistance. Resistance. Would it help if I put a line? Right? Would it help if I put a line here? Right? So this is how you guys trade. Look, 1, 2, 3. We broke it. Support. That's a failed breakout. That's a failed breakout to put in a lower high at a previous support level on the longer term trend. And look what you got. Bang. And it just sliced through that level. So what would you look for next? You would look to turn that back into resistance. You pretty much didn't get there because everybody and their mother, like me, already had it in mind. We get a bounce. We're going short. Bingo had it in his mind. J&J, I'll also check that out. We'll throw that up. Roku's another one I'm going to look at. We were looking to get to this 80, 50. Maybe you get back down to the 50-day moving average, right? But this trade is kind of, the meat and bones off of this trade is already done. You had a double top here, off of that news that they were laying off where it got that big gap up. And if you were here, you probably could have shorted it with us. I got faked out on it. Not that I went long. I went long and then took my profits because I didn't want to be long. I initially said in the morning, I did not. I think that this gap up can be sold off. I just didn't know that it was going to do it all in one day, but just sit and float its way down all day. That's part of being a trader, a human trader at that. You got to be the best type of computer that you can. So with that being said, we got the 50-day here on Roku. I keep moving that damn line. So Roku 50-day moving average, that's where, it pulls back down. It's going to edge itself up and get right back into this previous resistance support area. Maybe they both meet and then it cracks a 50-day and you find this thing back down here at 69. Obviously within the next month. So, Snow. The strat. No, I haven't. Buddy. I've heard of Fun Strat, Tom Lee, but no, I have not. Here's Snow. Snow with a gap up above the 100-day moving average. But what do you have here? What do we have? What do you guys see? I'm going to wait for you guys to answer this one. I want you guys to answer this one. I'm going to wait. I want to see if you guys can notice what's going on here on this chart. What do you have? Let's let you guys know. This turquoise line is the 200-day. The blue line is the 100-day. The red line is the 50. The green box is for buying, and the red boxes are selling. It's a joke, obviously. Can anybody see what's going on here? All right, so I'll just say it. You have, it's the 200-day, but you have a death cross. Or is that the 50-day to the 200? I'm pretty sure it's a 50-day going through the 100-day, right? Either way, you got the 50-day crossing below the 100-day. The only thing that I don't like is the fact that you have an increase in volume here. But look here. By Ross Smith, I found it to be better. Trading strategy, ICT, smart money, etc. I recommend. Yeah, I will. I will. I'll check it out. I'll check it out for sure, man. I mean, you want to keep. Let me just say this, Alex. Options just started a beginner series talking about it too. Okay. I haven't even heard of them. Yeah, I'll have to check it out. But here's the thing. I mean, I'm not, I obviously haven't seen it. Don't make trading harder than it has to be. Don't overcomplicate it, right? When I see something, like you've seen it, Bingo. What did I do today? Like, if I see a pullback, I've been doing this for almost 10 years now. Like earlier on that pullback, I know, I don't know, right? But I can see on a pullback, I don't have to draw the fib, but I do to see exactly where it's at. I know on a pullback, like how much of a pullback it is, right? Um, like today, I said I guarantee. Like right now, we've pulled back to the 38.2 fib, and the fib's not drawn. The fib isn't drawn, but I know from here to here how much it would be to pull back, right? I just from doing this for so long, I already know where the pullback lies in the Fibonacci, so I don't really have to draw it, but I do. Um, so yeah, for sure, man. What you want to do is just solely rely on who is in control. Ask yourself that. Who's in control? Are buyers in control or are sellers in control? That's it. If you guys also don't know the basic psychology of support and resistance, if you guys haven't been taught, what happens is like Bitcoin for us. Bitcoin is a beautiful one. You have all these buyers that are stuck up above 30,000. Every single one of them, until the day comes that they have to sell for a loss when they need money, they're telling themselves they don't care how long it takes. They're not selling it until it gets back to break even, right? So if you have all these people up here in snow, right? Let's take snow for an example. This is the basic psychology of support and resistance. You have all these people stuck up here above this price on snow, and that price is 165. So they're saying right now, if it gets back to 165, the area that they bought it at, right? Because they bought it here, right? Pulls back support, they buy it. Pulls back, they buy it. And then it breaks. Now, it didn't extend higher. So what happens? They say, it breaks. They say, I am only going to sell this if it gets back up to my entry point, right? So what happens? It didn't get up to its entry point. This is actually looking like a long-term island reversal. But if it gets back up here, which it did, and they sell it, right? And they sell it. The stock's up here. They sell it. And then it goes higher. So now they just sat in it. They sold it at a break even or a small loss. And then they see the stock go higher. And they're like, damn it, why did I sell it? So they say, I'm only going to buy the stock again if it gets back to where I sold it. And it pulls back. And that's where resistance becomes support, because the sellers turn back into buyers because they just seen it go higher. It pulls back. They get back in looking for the extension, and then they just get tossed around. So that's where the psychology of support and resistance is really from. Like, that's the psychology of buyers and sellers. Everyone has the same chart. Why is it that people lose money and others make money? Because they don't see the chart clearly on what's really going on. They may have gotten lucky here because now you're getting a pullback. Do we start to see some sellers step in? We'll see. That we got CPI tomorrow. So I'm going to look at tech, guys. I'm going to be looking at tech to be short. I still have like a longer list to go through. But what we can do is go through. I don't have it here. It's just, you want to be short whatever's been weak, and you want to be long whatever's been strong. Right? That's keeping it simple. AMD, right? AMD is one of them, but it's a decent stock. It's starting to get into that larger cap. If you ask me, it's starting to get into that larger cap. What's another? Just pull up ARK, right? Go to Google and look up ARK, and all the list of stocks that you see in ARK, look to be short. If this number comes in way higher, and if you start seeing yields start to rip higher, the 10, the 20, and the 30, and the 2s, you see yields ripping higher, I'm going to be short tech. You short whatever you want. What am I doing? What am I doing? So, if we go here, I can just pull up Tesla. Tesla was also weak, right? Meta. Um, what else do we have? Not Carvana, but Rivian. That's not necessarily a tech stock. Snap, CRM, right? ServiceNow, um, semiconductors, um, you know, communications, computers, Intel, Adobe, Oracle. Those are the ones I want to be short, right? Those are the ones that I'm going to want to be short if yields start to go higher. Let's talk about the news real quick, and then we'll get into questions and tickers. Um, this Ford and GM news. Did you guys not see the chart? I was late on it, and I brought it up in chat. I completely missed this one, guys. Look at the day that Ford had. And then we'll talk about the trade that I was not able to get into because I was waiting. I'm like, you know what? Because I missed it. I seen it a little bit late. I said it had relative strength, and we do have CPI tomorrow. I said earlier that I think with this type of strength, you get a gap up, but you may not get that gap up because of CPI. I completely forgot about CPI for some reason. Look at this move off the bell. Apparently, it looks like they're going to come to an agreement because tomorrow is when the strike or the where they can go, where the employees go on strike. I feel like it's going to be averted. You had a big bounce off of Ford. GM actually put in a nice double bottom, and looks like that they're going to. You'd have to pull up like a longer term chart to see the double bottom. But right here in this area, you got buyers. Look at that tail. Bang. Bang. I feel like that whole thing is going to be averted. We also still have the government shutdown looming now. Now they're still talking about government shutdowns. They're trying to impeach the president again. That's what they do nowadays, I guess. Every president that goes in, they're going to try and impeach them. It's so crazy, some of the world we live in, guys. It really isn't it? It was never like this growing up. It was never this ridiculous. So I'll give you guys the trade that we were looking at to go long. If everything, if we don't get too chaotic, look at JP Morgan today. Look at that, guys. And we still had time to buy it, and I didn't. I think we caught this right around here. Right here on this retest. Literally right here is where, right when it broke that high on volume, is when I called it out in chat. And I never took the long. I don't know why. Because I looked at the daily chart, and I just didn't know that it was going to give me, like I still had all that left. And I've also been saying, I'm just being patient, waiting for Wednesday and Thursday, right? So I don't want to mess up what it is that I'm doing, right? That's changing my game plan. I'm being patient until Wednesday and Thursday and Friday. So that would be me changing the plan. So let's look at this daily setup, guys. Look at that. This is a beautiful chart. If you don't know anything about charts, this is the most basic as you can get. This is a really nice chart setup. You have a previous consolidation. Well, before that, you have a rally. You sell off. We sold off. Jesus Christ, this mouse. So you got to look at it in a couple different stages. Or should, at least. You rallied. You put in a flat top base. You sold off. Kind of shake out weekends. There was news with that, too. You held the 200-day very nicely. Huge gap up with earnings, right? Consolidation, right? Consolidating. Resistance, right? Pull back. Look at that test of that 50-day right there. That's a beautiful test of the 50-day moving average on JP Morgan. Look at those tails. You never closed below it. You did here on this red candle. But these green candles, you never hardly closed below the 50-day. That's a sign of strength. You can go down to it, put in a tail, and rip higher. But if it's not until you close below it where mindsets start to change. You can try and trick pros all you want, but they're going to wait until they see the close. And what's funny is it closes below that 50-day right there, but then gaps up. And then you get a real strong day to get away from that 50-day. So here you are, right? That flat top resistance is now support. What else is support? You just made the 100-day moving average support, which is that blue line. So I'm going to look at this in a couple different stages, right? I have a consolidation area right here, right? This whole little area is a consolidation area. This is going to be a range, right? See how we tailed off of it today? What I'm going to do is I'm going to be, depending on CPI, depending on the data, now, like Roku, instead of shorting the bounces, I'm going to be buying the pullbacks. especially if we can get a pullback to the 100-day. I don't think we will. I don't know if it'll give it to us just yet. Maybe a couple weeks down the road, maybe. But I feel like we're headed to the 50-day. Where's your 50-day? This red line up here, right? What I do is, so I have it on like a, when I look to like a 3-minute, 5-minute chart, I put a box. I put a box there and I'll paint it red so that I know where my daily moving averages are, because they're important, right? So I can see it intraday that we're just sitting there bouncing like off of it or whatever, and we're rejecting or we have made it support, right? So then that tells me we break. I'll go long for the breakout or I'll short for the rejection, right? So think about doing things like that. If you guys don't do that, it's an idea for you to like kind of keep you in the game. I mean, I'm sure you can set it up to see it in a 3-minute chart. I just don't have, I have too much going on. Like my flexible grid, I have the fold ratio, ADD, advanced decline, and stuff like that here. That's what I use that for. So that this right here tells me like pretty much the market breadth, right? Vold, like the volume that's to the buy side versus volume that's to the sell side, right? Is it way overweighted to the buy side? Is like selling in control? Advanced decline, how many stocks are making new highs versus stocks that are making new lows, right? It's important stuff. That gives me, without having to go to JP Morgan, Johnson & Johnson, Nvidia, Apple, United Healthcare, and like physically looking around the market to see what's strong and what's weak. I can kind of, that kind of gives you a glimpse of it right there, the market direction. There's a little bit more to it than that, as far as like gauging like where it actually means something. What number. We can get into that another day. I like to look at it when it gets down to that 2 mark, right? That 2,020,000, whatever the hell it is. So JP Morgan, guys, this is a beautiful daily chart. We called this out in chat today. So if I get a pullback, chances are you're going to start to get this this area right there starting to become support now. So maybe this is the pullback that we want to see into 146, right? In the 146, maybe we look to start, buying the dip and seeing over the course of a couple weeks, a week or two, if we start to get back up to the 50-day in the top of this range here, right? In the top of that square box. It's a consolidation. This also could be, if you got to watch, because if sellers really start to step in to bring JP Morgan down, that's a whole nother problem. But as of right now, this resistance is now support. It's support. So I'm not going to think about going short, thinking about this and that. It's in a downtrend, yes. Look at the volume. That's the other sign too, right? Volume is your other key to say whether or not a level is actually going to hold or not. So let's go through these questions and stuff real quick. So Ford, we had that. Guys, crypto, right? Mara, Riot, Coinbase. Look at those stocks. Gary Gensler came out, had comments. Moderna's had news. There's been a lot of news with them. We were looking at CRM. Oracle. Oracle had earnings. They had a bad day again today. I feel like you have just people taking profits. Even at this level, look at the rip that it did last earnings, right? Just gap up, and this has been a big run for Oracle. It's what it is. It's a bigger, I think downtown Josh Brown from CNBC explained it well, which I need to get CNBC working, guys. My CNBC hasn't been working on my TV. I don't know what's going on. So hopefully by tomorrow it'll be all right. I don't know what happened. It's not working, so I might have to call the cable place. So Oracle filled its gap. So you could look at this gap down, guys, off of the earnings it just had. There's some volatility to be had. I would look for a bounce back to that 100-day at 111. Right? These are all trades you can take. Look at that tail. Right? It tailed right off of previous support. Trading doesn't have to be hard. Look at that. Look at that resistance that now made it support. Look at that. So you pretty much just pulled back to that resistance area and you found buyers to get long. So what would I do? I would look to get to the 100-day moving average and then see what we do at the 100-day moving average. Now that's a 50 cent trade, but it's still a trade. Well, it's like $2, $3, $4. So 109 to 111.50, right? So there's your range for Oracle. Really, you have resist. So what would happen? Could we take this to 113.50? Right? This was all previous support. You gapped below it. Look for the bounce back to 113.50. Right? Long to 113.50. Cash that out. Go short at 113.50. Back down to this 109 area. Right? If it's going to be weak. These are just ideas. Not telling you to do it, but so Nvidia, I think Tesla had a pretty bad day today. So again, the numbers tomorrow, guys. Hit that like button. Subscribe if you haven't already done so. If you could, invite a friend. Tell a couple people, whatever. It would really help the stream out a lot. I just, I want to help people be able to, like, successfully do this and not have to pay people that say they aren't the industry, who are the industry, an opportunity, guys. People don't have thousands of dollars just to waste, just to say, let me give this a try, right? You haven't had a chance to, like, say, let me get a taste test. Let me see if I want to be here. No, it's like they want your money. Trying to find another way around all that for people that really want to make it in life, guys. Inflation's tearing people up. You're going to have the labor market starts to tighten up. People are going to be getting laid off. You got to have something to be able to help yourself out with, right? Learn another skill. You can take this skill with you anywhere as long as you have the internet and a phone. Hell, even just a laptop, but hell, just the internet and a phone. You can do this, right? You can do this. You can come join us. We trade live right here, Ivy League Trading, YouTube.com, 7:30 to 4, if not 6:30, if not 7. I'll post it up. I've been coming on the past couple mornings. I've been working on a couple things, but price action has never been easier to read for me. Past 2 months have changed. Dude, that's awesome, bro. That's awesome, man. Yeah, that's awesome, man. That's what's up, bro. Yeah, I'm going to check it out. If you guys don't have any other questions or ideas or anything or whatever, like, that's what I got. So we're going to watch that core number, guys. We're going to watch that core and headline number. It's all going to come down to that because inflation can still go up. But if it doesn't go up as much or the numbers come in the way that I'm thinking that they could come in, not that I think they'll come in that way, but there's just, you want to have a game plan for different avenues, right? So this 0.2% core number comes in higher at like 0.4, 0.5. Hello, 441. I want to thank you guys so much for being here. We're going to concentrate on yields and all that tomorrow. If you're just joining us again, hit that like button for me. I greatly appreciate it. I'm going to post one more video tonight. I'm just going to pre-record it for a couple of college games. If you guys like college football and NFL football and like to make bets or anything, I've been doing that since 2017. It's actually what I do on the side. I've been doing it every single year and have made myself extra cash, whether it's a new watch, whether it's Christmas money, right? I usually will take X amount of dollars and I'll use whatever I'll use it for Christmas or whatever. It's extra money. So far I've never had a negative season. Even last year I did so well. I did so great last year. Even looking back, I was like, man, I could have did better. I left a lot on the table that I didn't take because I like to pick my spots, right? There was a lot that I could have taken that worked out, and I could have had an even better year. But I had a great year, looking back on, I'm like, I actually did very well last year, and I take it right into college basketball. I don't really play NBA too much, but NFL, mostly college football and college basketball, I'm gonna get my money. I'm gonna go get mine. And I love it. More so, I have a love for the sport more than anything else besides all that stuff. It's not about money, but I use that to be able to, give my other half extra Christmas money, right? Give her extra $1,000, $2,000, $3,000, $4,000, $5,000, whatever. So that's all I got. Thank you guys. Hit that like button if you haven't already done so. Come join us tomorrow on the desk. We'll cover these numbers, and I am going to look to. If these numbers come out and we get movement, I'm going to be taking full advantage of it, guys. So come join us. Come get prepared. Come have a game plan before the number comes out, before that bell rings. I'll see you guys there. Hit that like button. Come join us. Ivy League Trading, YouTube.com. I'll be on about 7:15 in the morning. I'll see you guys in the morning, guys. Thank you, guys. Thank you, Bingo. Thank you, Collins. Thank you. Thanks to everyone out there, guys. Thank you, guys. I'll see you guys in the morning. But I'll also have another video coming out.